Hey guys, Justin with Deep Dive Stocks here, and welcome back. I know it's been a while, but I'm sure you've noticed there's been quite a bit going on in the market, and so it's been keeping me a little bit more busy than I'm used to. Today, the data dive, we're going to be going into SPY and looking at the market as a whole. This isn't something that I typically do outside of the weekly email I send out to the premium members, but I think that there's some pretty interesting things going on that Deep Dive Stocks has been talking about since way back when. And now things are finally coming to fruition. So I thought it might be interesting to look at how the data were, how things have progressed, and then ultimately we can look at the data to see how it looks today and to get a little bit more of a forecast in terms of where we might be headed. So let's go ahead and get started. So the first time I really ever spoke about SPY or the market as a whole was on Wall Street Bets, and this was about 8 months ago. And during this post, the highlight of it was that I was pointing out that right here, the VoEx trend had dipped into the propagation zone. And what was remarkable about that was the only previous time in the recent history of VoEx that happened was in February of 2020. And the argument in the post was that this was a pretty significant event, right? A large ETF like SPY really shouldn't have VoEx dipping into the propagation zone, which, if for a quick reminder, is anything below this horizontal line right here. Also, a quick reminder, if you haven't or if you're unfamiliar with VoEx, I would definitely recommend checking out some of the other videos or heading over to the website, deepdivestocks.com, and reading some of the educational primers to kind of get a nice feel for VoEx, what it's telling us, and how it can be actionable for our plays. So in September, I pointed out that because VoEx had fallen into the propagation zone, and then I gave some examples of other stocks, most notably BABA, which we've seen how that progressed, and then EDU. Tesla was an interesting thing, but yep, we saw that typically historically VoEx trend dipping into the propagation zone has been met with market corrections and or crashes. And what's interesting is later we're going to see that the market did kind of recover, or at least in terms of VoEx, but not all that well. So then a few months ago, about 2 months ago, I did a post on the Think Tank subreddit. It's a great subreddit. Definitely recommend checking it out. And in this one, I really dug in and I started talking about exactly what was happening in the market. I started talking about a little bit of the VoEx spikes, which is something that the Deep Dive Stocks Market Scan collects every day, and started pointing out other examples of how SPY was behaving in terms of VoEx throughout the market. And the idea was that things weren't looking good. And there's, of course, plenty of examples. I highly recommend reading this. I think a lot of the stuff that I went over here is still very relevant. And at the end, and I said, in sum, things are rough. But they aren't entirely because of whatever is happening in the world. The instability that is unraveling here has been building for the past year and is systematically present. On the standard scale, there are some indications of stability might be returning per VoEx, net delta, option dealer positioning, and liquidity. But per VoEx, net delta, option dealer positioning, liquidity, things still look pretty shaky. And on the macro view, oof. And I think I got like a mixed review when this DD came out, and I did follow it up a little bit with a XRT that was requested. And in very similar fashion, I found that the data was showing that XRT, which is the S&P 500 consumer index, things were very shaky and unstable. And again, with some highlights and some examples going forward. And the name of the game here was that XRT was looking forward to some pretty turbulent waters. Now, I just wanted to point all this out because now that we're looking at the data today, this data that we're going to be interpreting today isn't unfounded. It's not without context. And in fact, we can see that the inklings or the little sparks of instability really started to present themselves all the way back in September when I was definitely, this DD that I did 8 months ago on SPY's instability was kind of laughed out of the subreddit. But here we are now, significantly down, and well, I don't want to say who's laughing now. It's kind of super cliche and unnecessary, but I don't think anyone is. So let's move forward to today. So we see that we're going to look at a few views. We're going to look at SPY itself, then we're going to look at the macro report, and then we're going to look at the market scan for the data, just to kind of see how everything is shaping up. The VoEx graph for SPY, pretty familiar to all of us, which, by the way, if you haven't, definitely recommend checking it out. You can look at the VoEx for SPY. Actually, let's pull it up. On the website now. So VoEx is updated every day on the website. Pretty nifty. You can hover over it and see some cool data. And you can get a daily track of what SPY is doing. And same graph here. And we see that VoEx, unsurprisingly, is still persistently in the propagation zone. And if anything, is deepening, which again, highly recommend checking up on VoEx. But this tells us that the climate of the stock, or the climate of this large ETF, is bearish. So the most probable outcome when VoEx trend is in the propagation zone is persistent and continued decline in price. And that seems to be the case ever since VoEx fell definitively again into the propagation zone in January of 2022. And we see right here, sorry, those are my puppies, but we see that it fell into the propagation zone, and ever since we've fallen quite a bit. So with continued declines in price, the most reasonable expectation per SPY or per VoEx on SPY, let's see what some of the other data say and if it agrees. The snap graphs, which take VoEx and kind of algorithmically interprets it to see how the current VoEx behavior kind of maps to past price action. And we see that on the 20-day, we have negative returns because the crosshair is below the gold line. 10-day negative returns as well. We do have some reprieve, it looks like, on the 1 week time frame, on the 5-day, but negative returns again on the 1 day. So overall, negative returns are anticipated all the way up to the 1 month of the 20 trading day time frame. One of the newer additions to the Deep Dive Stocks report is the gamma hedging heat map. And this tells us how much the hedging and in which direction the hedging has to go depending on how IV or the price changes. And we see right now with the end of today's data on the 24th that SPY finds itself very smack dab in the middle of some pretty significant, well, it's really not significant, it's pretty minor, right? Selling pressure. The white zone here indicates gamma neutral, so this tells us where the ETF would have to be in order to maintain gamma neutrality. The red indicates selling pressure, and the blue indicates purchasing support provided by all of the options on the field. And typically a stock is going to try to like stay inside of the gamma neutral zone. So that tells us that the price can either go up with IV decreasing, or the price can go down with IV increasing. Since SPY finds itself currently in selling pressure, this lends itself to a higher probability that the price will go down and volatility will rise. If volatility rises, or if the price drops significantly enough, we do have some purchasing support, but now we see that VoEx is in the propagation zone, the gamma hedging heat map is showing immediate selling pressure is present, and the gamma neutral zone is price down, volatility up. It seems like all the metrics so far indicate down is the most likely movement. And also worth mentioning that SPY has a net negative gamma, so it is technically in a gamma squeeze, although it does behave a little differently since it's a large scale ETF in terms of but I mean, it behaves differently, but the end result is the same. Stocks in a gamma squeeze go down. The expected price range graph, or these dotted lines here, this tells us what the market's expectation for the upper and lower bounds are for SPY. And we see that lately SPY has been pretty hectic. It's been bouncing off of the expected range bands, and some, a name you might hear for this is mean reversion. So we see that SPY is kind of mean reverting quite a lot. We see that liquidity is diminishing throughout the index, so volatility is rising pretty significantly. Shorting, nothing crazy going on here. What's interesting about the options layout is that there's no in the money calls. Right? Almost all of the calls are out of the money, which is pretty atypical. Usually you want what you see here on the puts, you want that on the call side, and what you see on the calls, you want that on the put side, where you have the majority of your puts are out of the money, and like you have about a nice 50-50 split of your calls. So this is like an inverted options layout, which is pretty destabilizing. And this is probably part of the reason why SPY's hedging finds itself in a very precarious position and with very little purchasing support below it. So that's part of the reason we probably see that there. And we see here even more that a lot of calls today. So on the right here, we have the change in the options from the day prior. So we see that a healthy amount of calls were opened up, and we can look down a little bit in the report to see what type of calls those most likely were. And then we see a good amount of puts were opened up, and more puts than calls. That's always a good thing, as long as those calls are dealer. Well, those calls need to meet two criteria to be like a really good sign, right? They need to be dealer short, and they need to be mediated through options dealers. Otherwise, they're just retail investors passing puts back and forth to each other, which those puts aren't hedged, so they don't provide that nice passive bid anytime the index falls. Today, so the take-home point here is unstable. These options aren't providing much stability, and we need to look to see how these calls and puts, if they were dealer long or dealer short, to really get a good grasp of how the market is anticipating SPY's next moves. Today's price action was pretty minor. We had a red day. That was pretty expected. Honestly, the volatility did rise, and we ended the day with a 23 million share hedging requirement, which is pretty substantial. Unfortunately, it looks like the gamma squeeze on SPY worsened by 200% today, so that's pretty significant. And we see these pesky infinities. We see that the out of the money calls honestly about equal for long and short, and then the out of the money puts also equal for long and short. So, right, well, unfortunately, so it's about split. So these are about half dealer long, half dealer short, and these are about half dealer long, half dealer short puts. So really, they kind of cancel each other out. Although it seems like with the volatility increasing quite a bit, Van is starting to take over and is starting to drop delta quite substantially. So from the report here on SPY, things still don't look pretty good. VoEx is in the propagation zone, indicating that the climate of the ETF is still in the bearish territory. The 4 snap graphs, or 3 of the 4 snap graphs, are indicating negative returns. We might get some positive reprieve here in the next week with some positive price action, but that's going to have to be worked against, or that is going to be worked against by the selling pressure present. The fact that there's very little purchasing support there. Choppy price action, choppy vol, this is pretty indicative of like a high number of dealer short puts or dealer long puts when you get that choppy volatility action. The options layouts aren't stabilizing. Quite a significant amount of shares have to be sold in order to hedge the price action and volatility action that happened today. So overall, SPY is in a pretty precarious position. And that's just from the SPY's report. We can also go over and look at the macro markets report, and this is a different view of VoEx. It's a little bit designed to look at the market as a whole, but unfortunately the story is the same. So we see that VoEx fell into the propagation zone in about the early to middle of March, and this is after it already did so once prior. But in the most recent rendition, VoEx trend fell into the propagation zone, and we see that since then, the price has been tanking on this view. And now that VoEx is in the propagation zone, especially on the ExVoEx, which is the extended VoEx, this is even more of a warning that extended price decline is the most likely. Surprisingly, QQQ's VoEx or ExVoEx is entering stability somewhat, so it'll be interesting to see if the price action at least starts to not drop quite as much. This is quite an interesting change just because originally it was QQQ that was more unstable than SPY, especially the tech sector was kind of like if you looked at the sectorized VoEx for FANG, VoEx was just nosediving into the propagation zone, and that was kind of pulling SPY down with it. But it seems like now there's a little bit of stability here mounting in QQQ, but quite worsening instability on SPY. One of the other new toys on the macro markets is the monitoring of the market-wide gamma squeeze counts. And these are different gamma squeeze counts that happen on the market scan itself. So this is a unfiltered market-wide view. And then the top graph, we have the gold line is the running rate of change of the gamma squeezes in the market and laid over SPY. And the darker line here is just the trend line. We see that what's cool about the gamma squeezes is that they tend to indicate like these local bottoms of the price action pretty well. So we see like whenever it kind of the 5-day running average spikes up and then drastically spikes down again, we do get a little bit of a price appreciation that occurs, a little relief rally. And that is kind of what happened earlier in the last week. But we see that now the rate of change of the gamma squeezes is starting to increase again. Another interesting thing here too is that it looks like the gamma squeezes themselves are oscillating like much more rapidly, right? So we get a much greater range of the rate of change in gamma squeezes, and that's kind of inherently unstable as well, right? Like you don't really, this should kind of just be a nice steady either growth or destruction of gamma squeezes in the market, but these wild oscillations are pretty significant. The second graph here is the raw counts of the gamma squeezes, and we see that we keep touching this 3,000 mark. And for reference, in March of 2020, we were sitting nicely at the 2,000 mark before the crash, and then in which case we plummeted down to like the 400s. And currently we're bumping up against the 3,000. And if this trend continues where the growth of the gamma squeezes are about to shoot back up, we may easily breach 3,000 consistently. And again, the only real historical precedence we have is that in March of 2020, right before the bottom kicked in, we had about 2,200 gamma squeezes, and now we're sitting here at 2,500. And last week we easily broke 3,000. So the number of gamma squeezes, I'm not going to get too much into it here, but the vast amount of this short delta that's permeating the market is definitely not stable, and it's causing these wild price fluctuations, this increase in volatility that we've been seeing lately. And so yeah, that's a quick view. So this is kind of what I look at every day, just to get a feel for the market. The last thing is the market scan. And really what I look for here is I'm just looking at the which stocks are in a gamma squeeze. And again, on average, a stock in a gamma squeeze will fall 5%. And that's uncorrected. So that's in a normal market, right? So the data, did the research on that data. It did include 2020 and 2018 in it. But even still, that it was 5% in like a vast majority of a bull market, right? So keep that in mind. And we have 30 new stocks in the high cap stocks that are in a gamma squeeze in the market currently. So that's pretty significant. We see already that we have some pretty resounding, pretty big moves, right? So Real in its third day in a gamma squeeze and it's dropped 18%. AMC's in its third day of a gamma squeeze, it's dropped 13%. GPS in the fifth day, it's dropped 18%. These are just some wild numbers, honestly. Tesla is in its fifth day in a gamma squeeze, it's dropped 11.5. TTD has dropped 15.75% in the past 5 days. And you'll see the common theme here is that a stock in a gamma squeeze drops. And it typically will drop in a bull market 5%. So we can expect that even in a bearish market or in a market that is bleeding quite profusely right now, that it drops pretty significantly. We have 24 gamma squeezes that ended today. ZM lost 23% of its value in the past 33 days. That was a 98-day long gamma squeeze. That's wild. The stocks that are currently in a gamma squeeze, and we see there's some big names here. Tesla and Nikola. That always reminds me of Tesla and Nikola, whatever. The no VoEx spikes. I'm not going to get into it here, but this is pretty significant. So in a healthy market, you see VoEx spikes. They're like little sparks of instability that kind of just pop up in the market. But when the market overall starts to become highly unstable, those sparks kind of just group together into one big explosion. So the market scan doesn't actually pick up any specific VoEx spikes because, well, everything is just exploding. So there's nothing special or specific to point out in the market. We see that the last decent VoEx spike day was 518, and we had all negative predictions, and it looks like every one of the stocks that had a negative prediction is going down except for CAG, little pesky guy. So overall, these are the 3 PDFs that I look at every day to get a feel for the market, and things are still looking pretty dire. It looks like the data that I pointed out 8 months ago and then 2 months ago is still quite accurate. And if anything, the conditions have gotten worse. So keep that in mind. Things are looking pretty rough out there. Remember, you can make money in any market. You just have to know which market you're in. And deep dive stocks, I hope to help everyone know what market they're in, especially the premium members who get all this data every day delivered directly to them. It's pretty nifty. So, yep, that's all I have for you guys. I'll put the links to the Reddit DDs and some of the other YouTube videos in the description. And if you like, comment, subscribe. Sorry for the background noise of my puppies. And yeah, happy trading, guys. And I'll see you guys next time. Bye.